The following is a presentation of TFNN, live at TFNN, The Money Masters. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the September 3rd, terrific Tuesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that empower human potential. Because living up to our potential, well, folks, that is something we must master each and every day. Hope everyone out there had a terrific Labor Day holiday weekend. You're all rested, ready for these markets here. Let's go take a look at an empowering belief. You know, it is my belief that life is constantly testing us for our level of commitment. And life's greatest rewards, I know those rewards are reserved for those who demonstrate a never-ending commitment to act until they achieve. This level of resolve, folks, you know what it can do? It can move mountains, but it must be constant and it must be consistent. As simplistic as this may sound, it's still the common denominator separating those who live their dreams and those who live, well, we'll just call it a life of regret. Don't be doing that. Live your dreams, folks out there. Be constant. Be consistent. Have that never-ending resolve, folks, and you can move some mountains out there. In fact, I want you to be consistent here. I want you to go over right now. If you have not yet signed up for the TFNN virtual trading competition, do so right now as we speak. It's going to take you a total of 15 or 20 seconds to do that. If you've never subscribed to any TFNN service, just go to the homepage of TFNN.com. What you're going to do is in 15 or 20 seconds, you're going to enter our virtual trading competition. That begins on September 9th, but you must be signed up by 12 noon on Thursday here, September the 5th. So that's just 2 days from now, less than 2 days from now. Well, I guess 2 days from now. There's going to be, look, 5 randomly drawn winners are going to get $100 each just for placing a trade in the system. Doesn't matter if it's a winner or a loser. 10 overall winners are going to receive cash prizes up to $3,000. An additional 10 winners are going to receive an autographed copy of the best-selling book, The Art of Timing the Trade out there. Everybody gets access to the Tiger's Den for the next 2 weeks. That's worth its weight in gold just there, just to simply be able to rub elbows with all of the members of the Tiger's Den out there. This evening at 6:30, Tom is going to be doing a 1-hour workshop for all of you that are members at TFNN. It's on your members page, so you don't have to do anything else other than just click on the links to attend live. That's from 6:30 to 7:30. Tom will teach you how to go ahead and trade the S&P in both directions, both long and short. He'll be showing you how to use the Nadex platform as well. So all the details on the homepage of TFNN.com. As we begin our trading session right now, we've got the Dow, which is the laggard in the market, and it's really lagging from a percentage-wise. It's up 87 points, only up about 0.6%. The S&P, on the other hand, that's up almost 1 full percentage point, up 15 points. The NASDAQ Composite up 1.25%. That's up about 43 points, 1.25%. What the Russell is up as well, up 12.5. New York Stock Exchange, that's really sending the signal as we speak right now because that's the larger market breadth of the entire stock market. That's up 103 points, but that's up 1.1% up there. We've got net advancing issues of 1384. The number to be paying attention to today is 1145. At 1145, the bulls will effectively have control of the market. Of course, the key that we're also watching to go along with that, to do the tango, is going to be the VIX index, the S&P Volatility Index. Right now, that's trading at 1657. That needs to get down below 1458 in order to signal that this is more than a counter-trend rally. Otherwise, that's what we will see unfold as large as it is. Now, let's go take a look at these markets here. And what we're going to do today, we're going to flip back and forth between the daily charts. We'll take a look at the monthly charts because we did have the month end on Friday. So I want to get a feel for how bearish was from a candlestick standpoint. We want to understand the message of the markets out here. Right now, we're going to take a look at the S&P 500. What it's tackling right now is this large downdraft that took place here on August 27th. And the top of that is at 1652.54. So far, intra-session, it is traded up to 1651.35. I suspect it's going to be able to hit that area. What we should also see is there's a little convergence here of this little descending price channel. So sub-correction price channel may turn out to be more than that, that it's trading. So these are the black diagonal lines. If you're watching us on Tiger TV, you can see it right now. And that, the other benefit of just being a part of the Tiger's Den for the next couple of weeks is that in HD, you get to see all of the contributor charts out there. So make sure that you are taking advantage of that and utilizing the Tiger's Den. Now, this show is archived on Channel 10. You can also get the live stream on your smartphone, your pad-type device, just by going to the homepage of TFNN.com. Over on the right-hand side, you'll see a button with 3 smartphones. Click on that, and this show will stream live. You'll be looking at my S&P 500 chart. You'll see some factors. Let me actually switch over to this chart right here. Give me a moment here. There we go. I'm going to get rid of a couple things that are on there. So what is likely to occur, the first test that we'll see is a test of the S&P 500 testing the downtrend channel. Now, to give you an approximate of where that is, if we just take a look at let's go from the August 2nd high down to the low that was put in the S&P on August the 28th. The dead cat bounce area gets you at about 1658. So we're going to assume that 1658 is the destination right now for the S&P 500. At 1658, it'll do a couple of things. One, it'll test and close the gap from August 26th. Now, the low of that gap, the low of that trading session is 1656. So your range here that you're looking at is 1656 to 1658 or so, somewhere right around there. Now, what's just up above the dead cat bounce area is the rising price channel that is still out there, which it clearly broke through with conviction. And it did it, it's the second time it's done it. It did it here on August 27th. That doesn't mean that it can't try to get back inside that rising price channel. That's the rising price channel here that we're talking about going back into the November 19th, November 16th level. My apologies there. So we'll see if price can make it all the way up there. We have a real confliction. Is that even a word out there? A real conflict going on. I'm sure confliction is not a word, but we've got a real conflict in patterns here because we have confirmed A to B equals CD patterns inside the IWM. Yes, the IWM actually gave us a confirmed A to B equals CD down on Friday. It was very subtle, but it actually did that. And that's the strength inside the marketplace. We've got a confirmed A to B equals CD down inside the SPY, inside the diamonds, not inside the Qs, but inside the Qs. What we know we have is we've got that island reversal session. So we know the different things that we'll be looking for. Now, I'm going to switch over. We're going to take a look at the monthly charts here. We're going to look at the monthly chart for the S&P 500. So the actual candle formation that occurred for the month of August was a dark cloud cover. Now, that is a reversal candle. It needs additional follow-through. And by additional follow-through, what I mean, we need to see a close below the trading session or the candle the month of July out there. And that low is 1604.57. But even if you get a close below that, what we're still looking at, if you're watching us on Tiger TV, you're watching that breakout that takes us all the way back into the highs from 2007. And that high out there inside the S&P, that's that 1576.09 number. And so that is really the strong area of support thus far inside the S&P 500. This is not the most bearish of reversal signals. In fact, if you were to take a list of 1 through 5 out here, with 5 being the strongest, a dark cloud cover is a level 2 out there. So it is not the strongest of reversals, as you can see. So on the monthly chart, yes, it's dark cloud cover. What does that mean? That means take your umbrella with you because the weather can change at any point in time. And don't I know that by being here? I spent almost a week here in a snowmass up in the mountains in Colorado. It's been great, and the weather can change in a heartbeat. Well, we'll see if the market's weather is going to change in a heartbeat as well. So that was on the S&P 500. Now let's go take a look at the NDX 100. We want to take a look at that because that had formed the island reversal pattern. So let's go take a look at the NDX because that's a very, did I say very? I did. That's a very strong reversal pattern. But likewise, remember, we learned as much from weakness as we do from strength out here. In fact, we learn more from weakness. And with the island reversal top being a weak pattern out here, if in fact that gets taken out, what that tells us is a very strong trend is still underway. Now, in order for that to occur, that island reversal, we need to see it close inside the NDX 100 above 3118.52 out there. So far, intra-session, we've been up to 3112.42. So it's only another 6 points out there. We'll have to pay attention to that. So it's the NDX that's got the very bearish reversal pattern, but that could simply be dismantled today with a close, as I say, inside the level of 31.1852. If we take a look at what that is on the Qs, then we'll go take a look at the monthly index for the NDX and get a feel for what took place last month. If we take a look at the Qs, the number that you're going to be focused on is a close above 76.55. That is the low of the August 22nd candle. And that August 26th candle is where we saw the island reversal form so far today. Now, even if it tags it, that doesn't, to me, that does not void out the pattern. We would need to see it close inside 76.55. Now let's go take a look at the monthly chart for the NDX. Let's go see if we found any kind of reversal signal inside the NDX. Remember, it's going to be important for us to be paying attention to both strength and weakness. So right now we're taking a look at strength out here. And as we take a look at strength, you can see the candle that formed last month was basically nothing. That was nothing more than even a pause button outside in the marketplace. So the NDX on the monthly chart, the area of support on here is going to be based on this bearish engulfing candle that formed the month of October 2012. Now, it's actually, because it was a bearish engulfing, it's actually the high of the session that it engulfed. In this case here, it was the prior month. That was September of 2012, and that high is 28.7838. That is your level of support on any pullback inside the NDX 100 on the monthly chart. But as we take a look at the last month's candle out here, folks, that is not a reversal signal. At least that is not a reversal signal on the monthly chart. Now, it's always important to take a look at charts that are above and below the levels that you trade. But if you trade on a daily, you may only be taking a look at the weekly. I think it's always important to go take a look at the monthly chart as well to get an idea of what the bigger picture is saying to us. Now, let's go take a look at Mr. Weakness or Mrs. Weakness out here, however you want to take a look at it, and that would be the Dow Jones Industrials. That did complete a bearish engulfing candle out there. So we do, because that is the weakest, we do have from the Dow, you've got that bearish engulfing. Now the question is going to be, is there going to be any follow-through? Well, follow-through may only take us down to the area of our October 2007 level. Now, if you're watching us on Tiger TV, you can see that the trend line that I have established here really isn't at the top. So remember, when we're taking a look at these trend lines, these areas, you don't have to be right to the penny. Sometimes I give you to the penny just so you know which candle we're taking a look at. But as we take a look at the Dow, going back to our October 2007 high, the high out there was 14,198.10. So you can use that as an area. But I'm using an area just a tad lower, really using the top of the shooting star candle. That is the brother. That's the opposite of the hammer candle, a shooting star. That's going to take place at highs, whereas a hammer candle is going to be taking place at lows. In the case of that shooting star from the month of July 2007, 14,021.95. That's really the number that I'm using for the Dow if it should pull back, and that should be an area of strong support out there. 877-927-6648. We'll be right back. We'll be right back, folks.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's up 75 right now. S&P is up 13. So pulling back a little, but if we take a look at the Dow, that's the weak link out here. And it's got a mountain to climb. That has tested the June 24th highs out there. So you can expect it to pull back, try to get some air here, because I'm not seeing it in the currency pair when we take a look at the euro, Japanese yen. So it's just like coming from sea level, like from Florida, out into these beautiful Rocky Mountains out here, and it takes a little while to adjust. You can't just climb these mountains and without some type of adjustment to your system, and that's really what's going on inside the markets as well. So let's go take a look at the currency pair that we're going to focus on. That's the euro yen. I've got the 30-minute chart up on my screen here. The key bar that it's taken on right now is this bar from 5 a.m. this morning. The high of that is 131.28. As soon as we see a close above that level, right now it's trading at 131.25. This is on a 30-minute chart, so it's got another 5 minutes to go. If we do see a close above that, we actually have more of a momentum pattern that is occurring here, and that should point to higher prices during the afternoon, during the late morning, inside the stock market. So nothing more right now, as I see it, than a pause. If we take a look at the ETF structures, and just go into the quick 5 minutes. Then we're going to go back and take a look at the monthly charts for the indexes out there for you and just finish those off. If we take a look at the 5-minute charts on the ETF, take a look at any kind of volume that's coming out of it. We saw a move up gap up higher this morning in the IWM with 1.8 million shares, and then went with 1.2, 1.10 million shares during that first 15 minutes of trading. The pullback here, not really on any substantial volume, a little bit of volume at the 10:20 session with 1 million shares out there, a little over 1 million shares. But, so far things just look orderly, in my opinion, out here. If we take a look at the other ETF structures, let's just take a quick peek at the diamonds. Let's see what's going on inside the week link out here. And the volume pullback here, nothing real substantial out here on a 5-minute chart inside the diamond. So the currency pair, the euro-yen, that is suggesting to me that we will see higher prices, and it's nothing more than the market just getting a gasp of air before it gets ready for higher prices. Now, I believe those are higher prices to be able to sell into, but we need to pay attention to that VIX index over the next couple of days here for confirmation of that. Now, we're going to go back and take a look at the monthly charts here. We'll go finish that off for you. Remember, our call number is 877-927-6648. We took a look at the Dow. The Dow did give us our bearish reversal signal with that bearish engulfing candle. We'll need to see some follow-through this week. And remember, we took a look at that trend line, or we took a look at the support level, which really I think is going to be set up by this shooting star candle from back in, what was the month here? That was back in, that's not good. Give me a moment here to do that. That was back in July of 2007. Again, that number being 14,021.95. Now, we took a look at the NASDAQ. We took a look at the S&P. That leaves us with the Russell 2000. Let's go take a look at the Russell 2000 as well as the New York Stock Exchange. Inside the Russell 2000, it did give us a dark cloud cover candle. Now, where are we going to find an area of support inside the Russell? Well, that's going to be pretty easy. We're going to go ahead and we're going to take a line and we're going to draw it across. We're going to start over here with a little bear sash candle that took place back here in July of 2007. We're going to go ahead and I'm actually going to go ahead back here and use this candle. I'm going to draw a line across here, and that's really going to be our level of support inside the Russell 2000. We can see the strength in that. And that level of support, we'll also go back and take a look at this little hanging man, which really is considered a reversal candle. I'll tell you, just get rid of it. It's not a reversal candle out there. To me, it's more bullish than it is bearish out there, and that's from the trading session of May of 2011. So we had a dark cloud cover, but not until it were to close below the candle session here from July, and that low is 981.30. Would this really give us any kind of bearish signal? This is a reversal signal, but it needs follow-through. That means for the month of September, you would need to see a close below 981.30. And then if we see that, what we will likely see is we would see the Russell 2000 move down to the area where it broke out from, which is really the 2007 area, and I would say that would be a high of about 856.40 out there. That is inside the Russell 2000. So it did give us a bit of a reversal, but it needs to get some more momentum to the downside, and there is most certainly that possibility. So let's go take a look at that little subtleness that took place on Friday that many may have overlooked out here. And as we take a look at the IWM, now the B point that I'm using for an A to B equals CD down, excuse me, I'm using the A point, which is going to be, of course, the August 5th high inside the IWM, and that was 105.63. My B point is August 19th at 100.59. That had 25 million shares. Guess what, on Friday? Closed below with 43 million shares. 877-927-6640. We're in that.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
TFNN is having an open house in the Tiger's Den for 2 weeks, and the best part is that everyone is invited and you just have to be a member at TFNN. The open house in the Tiger's Den has already begun and will last through our week-long virtual trading competition, which ends September 13th. Use this time to exchange trading ideas with other traders in the virtual chat room and discuss trading strategy while gaining high-definition access to all TFNN hosts' charts and screens during their live daily programs. If you're not already a member at TFNN, then the easiest way to become a member is by simply signing up for our $10,000 virtual trading competition, and the rest takes care of itself. In order to register for TFNN's virtual trading competition, you have to sign up by Thursday, September 5th at noon, and that's right around the corner. So don't wait and sign up now. For all the information and to fill out your entry, visit the front page of TFNN.com. TFNN's open house in the Tiger's Den for 2 weeks only, ending September 13th. Sign up today. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. We got the Dow's up 88 points right now. S&P is up 15. Google on the move out here, leading the charge. The upside up $15 and change, nearly 2%. MasterCard up $14. That's up 2.5%. You've got Regeneron Pharmaceuticals up 4%. That's up $9 and change. Amazon is up over 3%. That's up over $9 right now. Priceline up nearly $9 as well. Apple up $7.50. Biogen Bib up $4.89 out there. So a lot of nice movers to the upside. To the downside here, Herbalife is trading off about $2 right now. You've got Cytokinetics. That is trading off about 26%. So that is getting hit hard out there. We also have Microsoft down about $1.80. That's off 6%. Verizon off about 3.5%, down $1.66. Our call number 877-927-6648. Let's go take a look at the currency pairs out here. Let's take a look at the euro, U.S. dollar. You know, it tried to bust it up Tried to do that on August the 20th by getting over the swing point. That was a Gartley sell pattern that had formed back in June of 2013, June 19th specifically. And that candle session, we finally saw it break through that candle session. Either break, either to the upside or the downside, was going to point the direction. It broke to the downside, did that on August 29th. Now, if we just take a look at normal retracement levels, I would go from the swing point low of July 9th to the high that was established on August 20th. You'll see that prices below the 0.382 level. What does that set up? That sets up a move down to about 130 U.S. dollar. That'll put some strength inside the euro out there. That level's right around 133.95 range. U.S. dollar, Japanese yen. U.S. dollar, Japanese yen, it set up that nice Gartley buy. It did that on August the 8th. Let me clean up some of the lines that are on here. I don't want to clean them all up, then I'll have too much work to do out here. Now, a normal move of a Gartley buy pattern is going to be to move to the 0.382 retracement. I'm sorry, the 0.6R. You can see it's moving higher today. That says 100.29 is the next step. The ultimate outcome of any Gartley buy or sell pattern is that it will set up an A to B equals CD. So the minimum here, we're looking to move to 100.29. That's your 0.786 retracement. More likely then a move of a move, a 100% move of a move that takes you back to the July 8th swing point right around the 101.52 to 100.77 level. If it can come in there with a wide-ranging bar, that'll be setting up the A to B equals CD, and we'll take a look at that pattern as that occurs. Let's go take a look at the Great British Pound versus the U.S. dollar. Let's go see if there's any real movement here, and not really anything of any significance, mostly just narrow-bodied bars out here. This did complete the A to B equals CD pattern. That price projection was 1.572. It got up to 1.572. You got to love that, how that works out there. That was your A to B equals CD. Now, if we take a look at just a normal retracement here, it was also really working off an overbought condition. What we can see, it made that first move down into that 0.382 level. And we're going to call this candle that formed right here inside the Great British Pound U.S. dollar. That is a hammer candle. That low, 1.542. That level gets taken out. That'll set up a move down to at least the 1.533 level. But more so, what we should be looking at is the retracement of the entire A to B equals CD leg. That would say that we would more likely see a move all the way back down if that hammer candle gets broken, probably all the way back down into the 151.5 level. That is on the Great British Pound U.S. dollar. If we take a look at Goldilocks, see what gold is doing here this morning. Trading out at 14.01 and change out here. It made the 0.382 retracement with the U.S. dollar index getting stronger because the euro is getting weaker. Perhaps we'll see it move down to about the 13.33 level inside the gold. So we'll see if this is the only bounce if this is the only retracement that it's done, the 0.382 retracement. Gold has a lot higher to run to, but we'll see. My suspicion is that we'll see a little bit more of a pullback inside of Goldilocks. Silver very strong here this morning. It is trading out at 24.41. It's trading back inside the swing point high that was established out here recently, a couple trading sessions ago, August 28th. So it looks like silver wants to make another run for the 200-period exponential moving average. That'll be somewhere around the 24.90 level. It's at 24.41. That would also then be a test of the swing point high of August 28th. That was at 25.12. I suspect that is what silver is going to do before it gives us another indication that it may want to pull back even further. But so far this morning, no go there. Light sweet crude, it pulled back intraday. Now it's trying to get, it's just traveling inside this 7-point consolidation zone, which ranges from 103 to 110. We'll call 102.50 to 109.50. There's our 7 points that we'll use. Out there right now, it's trading at 108.09. Bonds here getting whacked. Bonds now below the swing point from August the 22nd. That low is 129.28. 385,000 contracts during that session. So far today, 254,000. So it's got volume accelerating to the downside. That actually sets up an A to B equals CD down inside the 30-year Treasury. The 8-point out here was when the 30-year Treasury was trying to test and get back inside that longer-term consolidation zone. It rejected that area. Now, if we take a look at the A to B equals CD, the 1-to-1 takes you to 128.10. That's where this is headed to, perhaps 126.29 out there, and that is in the 30-year Treasury. Let's take a look at some of these U.S. Home construction stocks out here. Let's take a look at the ITB. That is one of the ETFs. The ITB here had formed a key reversal session back here on this trading day of August the 15th. And was an extended condition. Now it's trading inside that candle here. So although that was a key reversal, it didn't really follow through with any kind of acceleration. But what you would like to see, that key reversal session in August the 15th at 22 million shares. What you're really waiting for is a test of the low of that at $20.18. What you'll also see as I pull this back here, and this is a beauty, this is where we have two patterns converging in the same price area where we saw that key reversal session. So that's why it's very important to be paying attention to the ITB, in my opinion. Those two patterns that I'm looking at, one was a 0.786 Gartley buy pattern. That 0.786 Gartley buy pattern starting out here on the trading session of November 16th. So it goes from the November 16th low, which was at 1893, all the way up to the high that was put in on May 15th out at 2619, makes a retracement of 0.786, getting back into that low on August the 16th out at 2118. That had set up the Gartley buy pattern. What it was also doing at the same time, and that's kind of the yellowish-looking area that you see shaded in on my screen, but you also see a light blue area. And if we take a look at the trading session from February 25th, 2013, all the way up to the high that was put in on May 15th, you'll see a 1.272 expansion. So we had a 1.272 butterfly buy, we had a 0.786 Gartley buy, and we also had a key reversal session on August 15th. Now, it was also a high-volume bar. So the real trade setup here is if it can get down and test that 2018 level and hold and do it with lighter volume, lighter than 22 million shares. Then what you'd like to see is a little sign of strength come in. Now, the cool thing about having two patterns like this converge is that if they fail, it tells you that you've got significantly lower prices coming at you. So that's the real cool thing about having this pattern here specifically on the ITB, which is one of the real estate ETFs out there, and that's one that we should most certainly be paying attention to. Speaking of ETFs, let's go check in on the Spider ETFs out here. Let's go look at the weak hands. That's the XLF. Give me a moment here. We'll pull that up on the screen as we take a look at the XLF. And we'll go take a look at some of the monthly charts for these sectors to get a feel for what kind of pattern formed out here. Now, in the case of the XLF, it had formed that 1.272 butterfly sell pattern. It did that on the trading session of July 23rd out there as it made a high of $20.93. Now, a normal pullback is to the 0.618 retracement level. Normal pullback inside this pattern. The normal expectation of a butterfly sell or a butterfly buy is the 0.618 retracement of the entire A to D leg. Well, the A point on this was the low that came in on June 24th out there. The D point was the high that came in on July 23rd. So if we go from low to high, you'll see at $19.48, that was your 0.618 retracement. That is exactly what took place. We saw a closing at $19.45 on August 27th. 3 trading sessions here where it just simply moved sideways. Today it has gapped up. Volume so far, 15 million shares. Now that's going against the downdraft with 72 million shares on August 27th. The high of that session, 1976. Should the XLF close above 1976, it will want to go ahead and close the gap. The closing of this gap would take us to the low of August 26th, $19.93 out there. So we'll see if it can get a close in there today. And it's important because the XLF is the second weighting structure inside the S&P 500. So it's going to be important in order for the S&P 500 to go test the top of its descending price channel. It's going to be important for the XLF to participate in this move as well. If we take a look at the XLK, that is the number one sector within inside the S&P 500. This thing has been consolidating ever since its little sign of strength, this little gap up on July 11th out here. So it's running anywhere from the lows of about 31, 37 up to the highs of right around the 32.30 level. It, too, though, needs to close its gap, and that would mean to get up over the August 27th downdraft. That downdraft is 31.73. Volume on the downdraft, 6.8 million shares. So far today, it's done 2.2 million shares. On a light volume trading session day, that is not too bad, folks. We've only been trading for an hour and 15 minutes, and that says that the XLK has the potential to have the volume to go against this downdraft. That's important because it's important for us to take a look at the NASDAQ composite, the Qs out there, because this market will not go lower without those participating to the downside. So we'll pay attention to that price level of 31.73 today. That is the top of the gap down, the August 27th high, and so far again intraday 31.66, 2.2 million shares going against 6.8. Let's take a look at one of the other favorite sectors within inside the S&P 500, and that would be the energy sector, which I believe is the fifth weighting structure inside here. And inside the energy sector right now today, that is trading out at 82.64. That is making a run here. Let's see if we got a confirmed A to B equals CD up. I believe that we do. The B point that I would use on the XLE is August 26th, and that did 7.2 million shares and crossed it with 11.8 million shares. So the A to B equals CD up inside the energy sector. This is on the daily chart that we're looking at. Takes you back to 83.50, maybe 84.17 as the number, which says the energy sector wants to go back and test its highs back here from August the 1st. That's at that 83.85 level. That means must mean ExxonMobil, Chevron, which are the two largest weightings inside the energy sector, are doing okay. Well, let's not assume that. Let's actually go take a look at some of our core stocks and see what they're doing and what kind of volume is behind their move here this morning. If we take a look here at Microsoft, that seems to be holding the 200 period. Exponential moving average is trading at 31.49 right now. Volume so far today to the downside, 70 million shares, going against this high volume downdraft day on July 19th that had 248 million shares to the downside. But let's go take a look at some of these other stocks out here. Let's take a look at ExxonMobil. Let's take a look at it. It's not ExxonMobil that's driving the energy sector. ExxonMobil trading, up at 87.73. So a slight, not even a gap up here this morning inside ExxonMobil. So it's not ExxonMobil. ExxonMobil has been trading in that 7-point consolidation range, as you can see out there. So it must be the others that are pulling the energy sector up. If we take a look at IBM, let's go see what IBM is doing. Then we'll take a look at Google and Apple. This is the weekly chart for IBM. Let's go switch this over to the daily chart out here. On the weekly chart, we can see that it has, in essence, still held the consolidation range out there. And that is a nice 30-point consolidation inside of IBM. So this morning here, gapping up. Volume behind the move, 937,000 shares as it takes on that little downdraft of 3 million shares. So my math says it could do that. It's trading with about the same volume from the August 27th area. So that's going to be important for us to watch as the Dow tries to inch its way higher. Looks like there is just a slight gap out here that needs to be filled inside IBM. That would be the low of August 26th, which is at 184.68. So that should be the target of where IBM is headed to. So far intraday 184.32, but volume not too bad considering the downdrafts that it's going against out there. It's not a breakout by any stretch of the imagination, but volume not too bad. I will take a quick peek at Google here because that has been the leader in the clubhouse, and we'll look at Google when we get back. Right now it's trading out at 864.10, 877-927-6648. Be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.6% profit to an incredible 48% profit in just one equity. And all 6 of those winning trades had been initiated no earlier than just the previous month. With the 600th weekly Gold Report issue fast approaching, Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began, and right now you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber, as this volatile gold market provides trading opportunities after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial to the Gold Report today by visiting TFNN.com. David White's newsletter that in 1986, you'd have been a millionaire by 2000. Disruptive, mostly little-known prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the
thing that pulls people back from the breakthrough that they're moving towards. What's the only thing that really stops people from the reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve. Yet, you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed, mastering probability. Money, work, freedom. Go to the homepage of TFNN.com, click on my name.
Russell Chapman, as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow's off 6 points right now. S&P up 14. Russell 2 on September the 9th. But you must be signed up by this Thursday, September 5th, by 12 noon Eastern Standard Time. You can't call the office at 12:01 and say, hey, I didn't get a chance to sign up. So go ahead and do that now. Also, this evening from 6:30 to 7:30, Tom will be hosting a 1-hour workshop. He'll be teaching you how to trade the S&P 500 in both directions. Also, we'll be teaching you how to use the Nadex platform in order to do that. Remember, sign up today on the homepage of TFNN.com. Following this show, we've got our man Basil Chapman. He's in the on-deck circle. In the on-deck circle. Now, I mentioned Google before we went to break out there. Let's take a look at the monthly chart here. We'll start off with the monthly chart. Now we'll go take a look at the daily chart. Now, interestingly enough, inside of Google, it did form a bearish engulfing candle. Of course, on the monthly chart, that was pretty easy to do. Why? Because you had a nice little doji candle here for the prior month. That was the week. That was the month of July out there. So very easy to form a bearish engulfing candle. But it did engulf the prior 2 months out here. It also engulfed the month of June. Now, if you take a look at this pattern on the monthly chart out here, and then you take a look at this pattern that takes us all the way back into the time frame of November of 2007, they look awfully similar, don't they? I had a nice little wide-ranging bar on the way up. Then just simply a pause button. In this case here, it formed a little bear harami candle. That was the month of November out there. We didn't see a bear harami candle, but very similar looking. And then we saw a doji, and then we saw a bearish engulfing. So very interesting that back in 2007, as Google was making its highs, at least on the monthly chart, guess what, folks? A very similar pattern that is unfolding as we speak right now. Now, that's just simply on the monthly chart. Let's go see what Google is doing here thus far today. Right now, it is the leader in the clubhouse, I believe, dollar-wise. Let me confirm that. It is up 60. No, it's MasterCard that just went into the lead by a nose, but Google's still up $15 and change. MasterCard up $16. Volume on the move, so we've got Google here. It's going to close the gap. It looks like it's already done that. The low is 866.05. It's been up to a high of 866.19. Volume, 822,000 shares, coming against 1.7 million shares, so it's got volume. Says that it more than wants to really close this gap up here. But if we do take a look, there is the beginning of a downtrend on the daily chart inside Google. Whether that's going to be it looks like that it really is. Whoops, that was a bad move there. Let me do this here. I'm just going to use the open bar from the high out here of July 16th, just in order to be able to look for the possible channel lines that could be forming out here. It could be all the way up there. Maybe that's probably the channel line. So it says that in the case of Google, we ought to see it move up maybe about to the 870. The 50-day exponential moving average, 876.10. That probably is where it starts to run into some resistance. However, if it breaks that trend line, that so-called channel line out there, that would be very strong. But on the monthly chart, Google is saying it may have peaked out for the time being. If we go take a look at what the monthly chart for MasterCard look like, let's just go see what's out there. They are the leader in the clubhouse as we speak here right now. MasterCard last month formed a shooting star candle. That would, in order to have confirmation, you would need to see a close below. I would use 603.59 in order for that pattern to come to fruition out there. So, folks, today what you want to do is the following thing. One, make sure you're signed up for the TFNN virtual trading competition. We want to be paying attention to the net advancing issues. The bulls will take control of the market if there are more than, what's the number, 1,145 right now. There's only 997 net advancing issues. Folks, thanks so much. Tomorrow I'll be reporting to you back from sea level as I go from these beautiful mountains out here in Snowmass back to Florida. Have a great Tuesday, folks. Look forward to seeing you in the morning. Take care.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.